Hi there, welcome to Kneppy Invest and welcome to October 10, 2024. We have about 25 to 30 minutes left of trading today, and overall, today's been pretty good. However, you could say and argue that we have not had as good a day as possible because Dow Jones was up 1.03%. The Nasdaq was up 0.8%. And resources is up 1.46%. More than likely, that is driven by iron ore, I'm assuming, and lithium because of Arcadium and Rio Tinto. Rio Tinto looks like they really want to acquire Arcadium, and Arcadium management is quite keen on the acquisition, believing it's in the best interest of shareholders. I'll talk about those particular companies during the top 5 stocks of the day. Couldn't exclude Arcadium because the share price is up a fair bit. So that could have helped our market today, but I'm a little bit surprised we're not up as much because of what happened in America. And Ortec only up 0.08%, which is quite weird, while we've seen a little bit of weakness in tech compared to the Americans. Not only that, I'm pretty sure some of these indices have dropped during the day. I'm pretty sure at one point we're up 0.6% or 0.7%. The ASX 200. So a little bit of weakness in the last half of the day, looks like. I'm not sure if there's been any economic news released during the day. I could have a quick look at Trading Economics site, and talking about Fed officials were split on a 50 basis point rate cut in September. Australia building permit slumped 6.1% in August. Well, as a property owner, that I should be quite pleased with that. If I was wanting to get into the property market in the next 5 years, not happy with that. We do have a deficit of supply of retail of real estate, and is that a concerning sign? I'm not sure. Not a big expert in property. That just sounds like the complete opposite of what we want. Australian inflation expectations lowest in 3 years. RBA would love to hear that. One of the problems about inflation and what can drive inflation is expectations of higher inflation in the future. So, for instance, if you think inflation is going to be quite high in the future, you go to your boss and say, "I need a bigger pay rise because we're going to see pretty big inflation." And that's the biggest problem that happened in the 70s. Just the expectations of inflation really helped fuel inflation. So the very fact that expectations now lowest in 3 years is a good sign moving forward when it comes to inflation. It's not the only thing we have to be careful of course, but expectations do have a role in inflation. Japanese shares track Wall Street higher. Oil rises on growing supply risks. And to be honest with you, everything's about demand and supply. I'll be honest with you. Everything is about demand and supply. Almost everything. Demand and supply drives everything. I'm being pretty general with that. I'm just looking at the commodities here. A lot of green, natural gas is down, coal is down, and the best performing is copper, up 1.1%, and wheat, up 1.59%. Interesting. Okay, so the agenda for today's video. We'll go through the ASX today, looking at the best and, again, spoonerism. I was just about to say the west and burst of the ASX, so that's a spoonerism. So I'm going to look at the best and worst sectors, indices, and also companies on the ASX today. We'll get into the top 5 stocks of the day. There was 8 nominations. Only 5 made it, and those 8 nominations included Materials Acquisition, St. Barbara, Regis Resources, Bailador, Guzman Gomez, Netwealth, Apiam Animal Health, and Arcadium. And I think you already know that Arcadium is in the top 5. Have I already said that? Maybe I have. I can't remember. Okay. And then once we go through the top 5 stocks today, I might answer some of your comments, your questions. Not answer your comments, answer your questions and reply to some of your comments. Okay, so let's get stuck into the ASX today. In a pretty good day overall, or generally, unless you're expecting a little bit better. Now, I have noticed there was a little bit of drop in our indices, particularly the XAO, XJO, and XTX from about midday. In fact, from about midday, we'll say 12:30 to 1 through to about 2:30 to 3. There was a bit of weakness in the Australian indices. I'm not sure why that happened. There could be many explanations, and maybe there is not just one explanation. Maybe they're all all played a role. Anyway, so let's have a look at the best and worst performing sectors. Sort of the complete opposite to what we saw yesterday. So yesterday, materials, energy, and real estate had a bad day. Today, they've had a pretty good day. And other than those three sectors, everything's either been fairly weak, financials and IT up slightly, and for some reason, telecommunications and utilities, particularly, down 1.19%. I'm assuming that might have something to do with AGL and Origin. Origin is by far the biggest company within utilities. In fact, it might have doubled market size of the next biggest, if I remember correctly. Let me just confirm that. Yeah, Origin Energy's market cap is 17.5 billion, and APA Group is second at 9.85 billion, and Origin Energy and AGL both down between 1.5 and 1.85%. So that probably explains the weakness in utilities today. Now let's have a look at the indices, and where's gold here? Always have a look at gold. Gold's up slightly, so more than likely what has driven our market or the resources sector today is iron ore and probably lithium as well. Where's energy there? Energy up it's a sector up 1.05%. We already know that oil's had an okay day as well. Okay, and I'll just briefly have a look at the ASX 20, up 0.33%. So I'm going to assume 13 companies up, 7 down. Let's see how wrong I am. Oh, there you go. 10 up, 10 down. Yet the XTL is up 0.33%. Two explanations for that. The first one is the biggest companies within the ASX 20 have actually had a better day, a good day. So CBA, BHP, what's the third biggest company? Can't remember. Those big companies had a good day. Or the second reason why it's 10-10, it's like no one's won, is because the companies that have risen by a greater amount, and the companies that have fallen. So let's have a look at the list of companies by market cap. So CBA is up, PHP is up, and CSL third, of course. CSL is the third biggest company. And so the first, or the top, the biggest and the second biggest companies on the ASX have both had being up 0.3% isn't a pretty good day, but definitely BHP up 1.13% is a good day. And then the next three biggest are all negative. So I'm going to assume when we look at the percentage change, which I will do in a second, we won't see many companies down all that big, but we might see a few companies up big. So let's see if that's the reason why it's split, 10 up, 10 down. And no companies down by more than 1%. Two companies down by 0.95 and 0.94%. So we haven't seen some really big falls within the ASX 20. And I wouldn't be surprised if we have a look at the best performing companies. We're going to see maybe a few twos and quite a few ones. Let's have a look. Oh, not only that, we have a 3.59% Fortescue, Guzman Group and BHP both up by 1%. And Woodside and Rio Tinto both up by more than 0.9%. So that explains why 10 companies up, 10 companies down, yet the XTL is up 0.33%. Okay. Let's get to the best and worst performing companies on the ASX today. And it's not going to be a shock to see Arcadium near the top of the top gainers. There's Arcadium. So we'll discuss Arcadium towards the end of the video. And it's no shock that Arcadium is the top stock of the day. Share price up 39% on massive turnover, $275 million worth of trading today. And other than that, I'm going to have a quick look at strategic elements. A little bit of okay volume today. And they have released an announcement titled Strategic Elements to Automate Energy from Moisture Development. Automate energy from moisture development. That does sound intriguing. Automate energy. I didn't realize you could automate energy. I'm not sure what it's talking about, but it does sound intriguing. Is pleased to announce the launch of an Energy Inc. cell-to-sheet program aimed at creating larger scale prototypes and demonstrators with significantly increased energy generated from moisture. The program plans to use automated printed electronics machinery to commercial facilities to produce A4-sized sheets of cells, progressing towards stacking large numbers of these sheets vertically to enhance energy output. Collaborative team from the University of New South Wales, Stealth Technologies, and SOR. Sound intriguing, and the market does like it. So strategic elements, let's have a look at the chart. I don't know much about this company, but that sounds really interesting. Now, just because it sounds interesting doesn't mean this company is going to be really successful, because there's been a lot of really interesting ideas that have completely failed. And when you have a look at the chart, it's not a chart I do like. Now, even though the share price is up today, we have seen a little bit of selling. Massive volume coming through, by the way. A little bit of selling. Share price has been as high as 6 cents, now at 4.9 cents. And it's pretty understandable why there has been selling today. Or another way to look at it, because we've seen a lot of buying as well. But the way to look at this is the enthusiasm of the sellers is a little bit stronger than the enthusiasm of the buyers right now. And the reason behind that is because the share price has been a downtrend, and a lot of people just want to get out of this dog stock. So that's an interesting one. Have a look at this announcement. And for anyone who has an investment in this company, I'd love to hear your thoughts on strategic elements. Now let's get back to the top gainers. Other than that, we have Panther Metals, Respiri, and there's a chance I might be glossing over a few interesting announcements here. Let's have a look at Respiri. What was it? RSH? There was enough turnover and the market cap is enough or high enough that I'm thinking this company did release something. And they didn't. There you go. Just shows you just sometimes don't know. So nice turnover, and market cap is 72 million, but no. Wildcat Resources, and there's Orthocell again. I should have bought some Orthocell the other day. I thought, I'll see if it comes back to 50 cents. Now it's at 66%, and 3 good days in a row. I'm not going to chase it though from now on, but it's up again, 19%. And Wildcat Resources, pretty good turnover for this company. Let's have a look if they released something today, or maybe last night. And they didn't. In fact, 2 days ago, they released an announcement saying they hit 84 meters at 1.4% lithium something at Leah. What's Li20? Lithium, it's not carbonate because there's no C there. Lithium something or other. And maybe it's just called lithium. Now, lithium is not that. Anyway, I'm going to Google what is Li2. Lithium something carbonate, something 8. Lithium oxide. Of course, lithium oxide. Stupid me. I am not a chemist. Anyway, so let's just have a look at the chart for this one. So this could be just a continuation of a few good days for Wildcat Resources. And no, share price is just, for some reason, surging. And BrainChip is in here. Now let's have a look by market cap. We have Arcadium, Sayona, so there's lithium, graphite, Demerix, returned for that company. Let's have a quick look at the chart for Demerix, because the share price was below 40 cents not that long ago. So is the chart looking better? Oh, it's starting to look a little bit better. Demerix, it was as low as 35 cents not long ago. Now it's up to 45 cents. And Titomic had a good day yesterday, another good day today. Oh, AccuSensus, 93 cents. I did trade that, sold out of it because of a few negative announcements. Looks like the share price is rallying. Looks like the bulls are back in AccuSensus. And that's about it. Not that exciting today, apart from Arcadium. Although, if you might be a shareholder in some of these other companies, and you're probably thinking it's been a really good day. Now let's have a look at the top losers today. I don't think any of there's one company in my top 5 stocks that more than likely will be in this list. That's Metals Acquisition, because they did do a capital raising. And let's see if it is in this list. Activeport, I think they might have done a capital raising as well. That's why the share price is down. I remember seeing this company in my announcement list. And there we go, yeah. Renounceable rights issue to raise up to $5.3 million. Share price down 59%. I'm hoping this isn't a capital raising done at a 60% discount. That would be insane. I don't know why any management would do that, and a lot of management teams have done that in the past. Attractively priced at 2 cents. That's not attractive. It's not attractive. In my opinion, that's not attractive. We're just seeing the share price drop all the way down to 2 cents. It's not attractive. I can tell you the shareholders are like pissed off right now. We've done a cap raising at a significant discount. The share price has gone back straight to 2 cents. And that shows you the shareholders don't like it. The market doesn't like it. Share price down 59%. Yeah. And if I was a shareholder, I'd be pissed off. That's too much of a discount. Maybe they needed a discount to raise the money to get it through. But again, that just shows you that maybe this is not an investable company right now. Just going to have a quick look at the chart for Activeport, ATV. And I have a feeling this chart is, it looks ugly. And share price now at 2 cents. It has never been 2 cents. In fact, from the time this company listed back in late 2021, share price 20 cents, now it's 2 cents. Share price has decreased 90% since it listed, and this is not the type of capital raising you want to see if you're a shareholder. So share price down 58%. That's horrendous. And there's nothing else here. The company, oh, there it is, metals acquisition down 11%. I will discuss this company in a second because it did make it in my top 5, and maybe Activeport should have because that share price is down 50%. Now let's have a look by market cap. We have PEAT, P-E-E-T, not P-E-T-E. I'm pretty sure that has something to do with PEAT. Actually, I have no idea. It says it's real estate. I'm just going to see if this company did release anything today. I have never, ever had a look at PEAT. Let's have a look. Nothing. Maybe that's why I've never had a look at this company. Let's have a look at the chart for PEAT. Is there lack of liquidity here? Well, not really. In fact, they had a really big update yesterday. So yesterday share price went up 8.5%. This is just a correction back to normalization for the share price. And if you look at the weekly chart for this company, it doesn't do much over time. So this goes back to 2012. In fact, the share price has gone sideways over the last 11 years. Not sure why anyone would be invested in this unless they have really good dividends, but that's probably about it. Let's have a look at the summary. Do they have a good dividend yield? 3%. So very little, if any, capital return and very small or low dividend. They acquire, develop, and market residential land. Anyway, whatever floats your boat. KMD brands down 4.8%. And Rimfire Pacific had few pretty good days. Now it's down. Close the loop keeps on falling. And that's about it. Okay, so let's get to the top 5 stocks of the day. A few companies did not make it into my list, including St. Barbara. Now, St. Barbara, I do like the chart. And they did release some sort of, they do have a minor project. I'm pretty sure that project's in Nova Scotia. I could be wrong. Nova Scotia. In fact, let's have a quick look at St. Barbara. Not sure if it's called a feasibility study, something like that. Well, share price is up 5.97%. Atlantic projects updated pre-feasibility. And I did have a quick look at this, and it sounds actually not that bad. Was it $200 million initial capital expenditure to get this project up and running? And the market seems to have liked it. Share price is up 5.97%. So maybe this company should have made it into the top 5. Yeah, maybe I'm being a little bit unfair. The thing I like about St. Barbara is the chart. I actually do like this chart. I have no complaints. This is a nice looking chart, and it is on my radar. And yeah, I have no complaints. So if you're a shareholder of this company, I'd love to hear your thoughts on St. Barbara. My biggest problem with this company has always been the management. Maybe the management is completely new, has been completely refreshed. I actually have no idea about that. But the chart is speaking to me. The chart is speaking. So that St. Barbara, unfortunately, did not make it in my top 5. Got close. Regis Resources released their production. Oh, share price up 4.5%. So maybe this could have made it in my top 5 as well. 3rd consecutive quarter of strong cash and bullion build. The thing I did like about this particular announcement is, the cash and gold have increased by, what was it? Up 85 million in the quarter, from 295 to 380 million. And so production versus guidance seems everything's moving in the right direction, but the market likes it. Let's have a look at the chart for Regis Resources. And I'd say the chart looks pretty good as well. Not so. In fact, I don't like this chart as much. If you just look at it overall or holistically here, since 2022, share price has just been going sideways. Okay, so we can move on to the next one. And the other company that didn't quite make it was Bailador Investments or something, Technology Investments. And they actually have released a couple of announcements recently. In fact, in 2 consecutive days, Rostify follow-on investment and valuation uplift. That valuation uplift was quite small. And Dash follow-on investment. This company does have a fair bit of cash. And I do like this company, but in fact, I'd say some investors might like this company because they do invest. They're sort of like a private equity. So they do invest in companies that are not listed. And some of those companies eventually do become listed on the ASX. 2 of those companies are Straker and SiteMinder. SiteMinder is quite big. So some of these companies they are investing in, there is a possibility they will list on the ASX eventually. Not an absolute, but there is that possibility just because of what this company does. But when you look at the chart for this particular investment company, it doesn't look that good. Now, Bailador is trading at a significant discount to the NTA, and they are conservative with how they value their investment. So there is definitely an argument that this company is cheap right now. And in fact, if you do look at the last few weeks, chart does look like it wants to turn around, doesn't it? Really good volume coming in today. We saw a spike in volume back on the 31st of July, not quite at the low, but that was a good sign that there was someone taking a position in this company, someone big, and that could signify, is that the word? That could signify that the low is nearly in. Good. Okay, so let's get to the top 5 stocks of the day, starting with number 5, Metals Acquisition. A recent listing on the ASX, share price down 11%. We are in the closing auction right now. That's why we have the indicated price down a little bit more from where it closed. So if you have a look at the summary, for those who have never seen it, closing auction. So if you want to buy some shares in this company between at the close of auction or the close of normal trading and 10 minutes after the close of normal trading, it's called the closing auction. It might be called something else, but you can put a bid in. So we can see there's a buyer, a couple of buyers at $18.86. There's a couple of sellers at $17.48. Now, if you put a bid in at $18.86, you're not going to buy the shares at $18.86. What the machine does, or the algorithm, it sort of matches up the buyers and the sellers. So at indicated price, $18.30. So if this does go through at $18.30, there will be trades. So those who put some bids in at $18.86 will buy shares at $18.30, not their bid price. And they get preference over the ones below them, the buyers below them. So they get first preference. That's why you do see a big discrepancy between where the share price finished and the first buyer and the first seller, because they get first. But you also have to be aware that if no one wants to sell, then, and if you put a bid in at $18.86, you actually might buy shares at $18.86. So it's a quite interesting, or what happens during the closing auction is interesting. So share or bids sometimes are put in and then withdrawn, put in and then withdrawn. There are people trying to manipulate the closing auction, and sometimes you'll see the last trade being only one share, and that is to manipulate the closing price. Anyway, I'm going on a bit of a tangent here. Metals Acquisition did a capital raising, $150 million capital raising. So the share price is $18.40. Now, I did open this up just to see why they're doing a capital raising. To me, that's the most important thing. The other thing I like to look at is at what price. Now, usually to see what price is fairly quick, and there it is, $18. So unlike Activeport, where the share price is right on the capital raising price, there is a bit of a difference or distance between the capital raising price and where the share price of this company is. So that means if you are a share of this company and you see the share price significantly higher than where the share price is right now, if you see the share price right now significantly higher than the capital raising price, you're more likely to participate in the capital raising. If you see the share price below where the capital raising is being done, why would you participate? You can buy shares on market at a lower price in the capital raising. Now, the one reason I did open this up is just to have a look at what they're doing with the proceeds. And it's in the third highlight section. Placement proceeds will be used to optimize metals acquisition balance sheet and delever by retiring its existing mezzanine debt facility at the earliest practicable date. Now, that can be a good thing. I prefer to see acquisitions because of being used to grow the company. But this looks like it's being used to bring in a much healthier balance sheet, which is not a bad thing, I suppose. Yeah, but maybe being a little bit harsh on metals acquisition. Now, this company recently listed on the ASX, and when I say least recently, I'm thinking 8-9 months ago. Where is it? Oh, I put in the wrong ticker code. When did they list? Oh, February. So 7 months ago. Anyway, this is mining company. I'm not sure what they actually mine, but they're pretty big. When I say pretty big, I have a feeling they have a market cap of about $1 to $2 billion. $1.36 billion. So they probably are in production, I'm assuming. Anyway, let's have a look at the chart again. And I'll be honest with you, they've done the capital raising in the right price. They did a capital raising after the share price went on a really nice burn, really nice run. Share price went from $15 back up to $21, and now they've done a capital raising. So that's the right way to do capital raising after share price has got a run. So the worst time would have been if they did a capital raising in early September when the share price was $15. That would have been a horrible, that would have been absolutely terrible capital allocation decisions from the market or decision making from the management team. And I would have actually torn shreds to this management. But they've done the right thing. So that's metals acquisition coming in at number 5. Share price down 11%, but could have been worse. Have looked at Activeport. Coming in at number 4, we have Apiam Animal Health. Share price up 10%, 4.35%. Okay, so there is rumors of takeover bids. Oh, not only that, Apiam rejects non-binding indicative offer. I like that. I like when companies reject takeover bids. I'd like it better if they just said get lost and don't come back. So Apiam Animal Health notes the commentary in the AFR on the 9th of October. It confirms it has received a non-binding indicative offer, NBIO, for the acquisition of 100% of the issued shares of the Apiam. They don't have a price here. But they did say the board unanimously considered the offer to be undervaluing the company, was insufficiently developed and not in the interests of shareholders. The board has advised the prospective bidder that he does not intend to engage further with the prospective bidder. Anyway, so this is good news, in my opinion, for shareholders. And the reason I say that is I think this bid is opportunistic. Now, why do I say that? Let's have a look at the chart. Now, I'm not sure if AFR had a price, but have a look at the chart. Share price is turning up. So I'm pretty sure whoever put this bid in saw the chart and went, ooh, share price is now running. The financials of the company are improving. Now's the time to put in an opportunistic bid. And I think the management is right to say, hey, you're undervaluing the company. Because it wasn't that long ago, and in fact, we're a better company now, wasn't that long ago when the share price was about $1.75. And we're a better company now. So congratulations, and I think to the management, because I think they are doing a good thing. And I think it is in the interest of shareholders. Because the chart looks really good. I do like this chart. There has been a bit of selling today, however. And I think there's been a little bit of selling because there was a bit of buying back at the start of September. So there would have been some shareholders who bought during that period, and they just want to get out today. So they saw the opportunity and they've gotten out. And the share price, though, in saying that, it still looks pretty good. The chart still looks pretty good. I like it. So that's, what's that called? Apiam Animal Health, coming in at number 4. Coming in at number 3, Netwealth. Share price up 3.8%. This chart's going to look pretty good. They release their quarterly business update. I love announcements like this. Tells shareholders and the market how the company is performing. Now, I'm not a shareholder of this company, but I do use their services. I won't say amazing things about Netwealth, but they do their job. Funds under administration, $95.4 billion, increased $7.4 billion for the September quarter, with net inflows of $4 billion and positive market movement of $3.4 billion. That's all I need to know. Everything else in the announcement, I don't really need to know. That's all I need to know, that first comment. Don't need to know total number of accounts, that sort of thing. I just want to know funds under management, and you can have a look at this nice table because it shows the history, financial history, funds under management or under administration and that sort of thing over the past 5 quarters. And most importantly about this company, they are growing. And the chart shows you that. So let's have a look at the chart for Netwealth. This should be a nice looking chart. Oh, it's better. Yes, it is nice. This has been a nice looking chart for a long time. So they listed back in 2018, was that 2017? Share price then was $5. Now it's $27.25. Now there's been periods of time when the share price just went sideways. So from when they listed to 2020, share price went sideways. Share price went on a massive run in 2020. Then from late 2020 all the way through to start 2024, share price went sideways again. And now the share price has gone another run. So probably my biggest issue with Netwealth is just the valuation. I'd say the P ratio is like 100. I could be a little bit wrong. 76.65. So there is a little bit of froth built into Netwealth Group share price. And I think the same thing can be true for Hub24 as well. So bonus chart here, Hub24. It's another brilliant looking chart. And I did take profits. I was trading this. Then I took profits. That was a mistake. I should not have taken profits. That's okay. We learn from our mistakes. So that's Netwealth coming in at number 3, Guzman Gomex. Flat. Now they did release the first quarter financial year 25 update. My favorite type of announcement. And that's the simple reason why this company is number 2, why Netwealth make it number 3. Possibly Netwealth could have come in at number 2 and Guzman at number 3. But I love these sort of updates, and I wish every company would do this. Now, in saying all that, there was one, I don't know, I was going to say one thing I look for when it comes to Guzman Gomex is how they're performing in the United States. Now, I'm very dubious they will do anything in USA because there is plentiful of Mexican-based restaurants in the United States, and they all are pretty good. Well, maybe not all, but a lot of them are pretty good. So I'm a bit dubious that this company will make it and be successful in the United States. So the main thing I looked for here was how they are performing. Now, they did explain why sales in the United States did drop from 2.7 million to 2.6 million. Maybe not when all, but they did mention here, the US segment has performed in line with expectations during the quarter, with the prior corresponding period benefiting from initial higher sales associated with new restaurant openings. Now, 1 year ago, they had, how many stores? 3 stores in USA. Now they've got 4. So they have more stores. So unfortunately, revenue has gone slightly backward. So still dubious about that. But in saying that, US is a very, very tiny part of this business. But if they do make it in USA, there is an argument that this company might be fairly valued. And that is might. By far the biggest market is Australia. 260 million of their 278.8 million of revenue is in Australia. Singapore, nice little growth there. And Japan, some good growth there as well. Stores in Singapore grew by 1. In Japan, grew by 1. In Australia, grew by 19. New restaurant openings in Australia, 10 last year, 5 this year. Okay, so it's moving in the right direction for Guzman Gomex. And probably the only issue I have with this company is just the valuation. Just the valuation. That's it. I thought at $20 it was overvalued, even when they listed, and then the share price dropped to $25. I even thought at that price it's overvalued. So at $38, yeah, I have no interest in Guzman Gomex. However, in saying that, just look at the chart. So if I just decided to push away my biases against the valuation of this company, and if I just trade the chart, I'd be like, oh, the chart looks pretty good. Now, in saying all that, there is research out there that suggests that if you do use valuation in part or as part of your trading decisions, and when I say trading, I mean technical analysis, that valuation actually does matter, even for technical analysis. So if you had two charts that look very identical to Guzman Gomez, and one had a P ratio of 5, another one had a P ratio of 2 million, the one with a P ratio of 5 is more likely to be successful in the long run. And it all makes sense. It makes sense if you, and when I say that P ratio, I'm saying both companies are virtually identical. So I'm being a little bit dramatic saying one has a P ratio of 5, the other one 2 million. But I think you get my gist. You have identical companies, and one company has a much lower valuation than the other company, and they're very similar companies. Then if you had to decide on which one to trade, go with the cheaper one. So valuation matters even when you are using technical analysis. Okay, let's have a look at the company that comes in at number 1, and it's LTM, Arcadium. I actually had no idea there was a takeover bid released last night at 4:30 p.m. I don't know how I missed that. I usually don't miss any announcements released after 4 p.m., but I did miss it. And then I saw a Form 8K, Form Def 14A, and a pause in trading. And share price is up 38.75%. When did they start trading? So there was a pause in trading, and it started trading at 11:01 a.m. Look at that massive, some LTXT, that's cross trades. I'm not sure what LT means. Maybe before trading had begun. So big cross trading before then at $8.22. That's probably Rio Tinto, I'm assuming. Maybe, I don't know. Anyway, share price opened at 8.22 at 11:01. And the reason it started trading then is because of the Def A 14A, whatever that is, was released. 186 pages. I'm not going to open that up. Now, I did open up, so Rio Tinto to acquire Arcadium Lithium. I have not had a look at this particular announcement. I did have a look at the Form 8K, and the last page in Form 8K is the thoughts, is a sort of like an announcement or some commentary from the chairman. So I'll have a look at that, and I'm going to open up the Rio Tinto to acquire Arcadium Lithium. So I'm assuming the takeover is at about 8.40. I'm going to say 8.40, maybe 8.50. Let's have a look. Oh, it's stated in American dollars, 585. So 90% premium to the closing price on the 4th of October. So share price has already risen a fair bit because of the rumors the other day. So that is a nice premium to the share price. So congratulations to Arcadium Lithium shareholders. Now, in saying that, I do think this is an opportunistic takeover bid for Arcadium Lithium. And I want to congratulate Rio Tinto because this is exactly what mining companies should do. At the bottom of the cycle, that's when they should be acquiring distressed assets. I'm not sure if Arcadium Lithium is distressed, but this is exactly what a company like Rio Tinto should be doing. So I actually do like this company a little bit more because of this particular acquisition. So what is 585 in Australian dollars? I'm going to just Google it. Actually do US currency versus AUD. Okay, so we put 585. 870. Okay, so 870. So it's a little bit below the share price where I thought it might be. So you do need a bit of a buffer there. And if I was a shareholder of this company, would I sell? Probably. Usually I do sell. Because you just don't know. There's this chance that this takeover might not go through, and then the share price of Arcadium will drop like a rock. So there is always that risk. On the other hand, there could be a bidding war. Don't know. Now I'm just going to open up and show you the thoughts of the chairman. Where was it? Oh, it wasn't the last page. It was the 6th page. And the third paragraph, no, it wasn't third paragraph. Where was it? So yeah, actually in the first paragraph, they just mention why our board of directors believe this transaction is in your best interest. So the board, the management are pro this particular transaction. So that's probably a good or have that has de-risks this particular acquisition and more than likely will go through, not absolute. And so they, while we remain very optimistic about the long-term outlook for lithium as an energy transition continues, we believe the all-cash premium offer made by Rio Tinto is a full and fair one for our shareholders. We arrived at this conclusion after conducting a comprehensive evaluation of Rio Tinto's proposed acquisition. So yeah, the management like it. It doesn't mean shareholders will like it, but with the share price up 90% or something like that, I don't think there'll be many shareholders who hate it. And there's a chart. Now, in saying that, so the share price is up here. The share price was higher than this back at the start of 2024 because the share price has dropped a lot during the year. So that's probably the only issue might be for those people who bought in January might be saying, well, the share price was high when I bought in. That means you could have got more for this particular takeover bid. Maybe. Anyway, the share price has risen a fair bit. It's more than doubled since the takeover bid was announced, or just before the takeover bid was announced. The day before the takeover bid was announced, the share price was $4.18. Now it's $8 and whatever cents. So it's almost doubled. So there's a nice premium since the takeover bid was rumored. And that is the top stock of the day. I'm just going to go through a few of your comments because this video's already gone 41 minutes. Dave Williams talking about I'm going to do a Clarity, Telix, and Neuron Pharmaceutical standalone video. I was going to do it after this, but I thought this video was going to be quite short. Any chance you could do a quick run through the Clarity chart? How do you differentiate a short-term drop versus a change in trend? So we have noticed the share price of Clarity dipping recently. And the question becomes, when does it change? When would I say the trend has changed? I wouldn't be there just yet, but it's starting to look negative. I do have a sell price at 650. Now, I could have been a little bit more conservative and put my sell price at about 750. Well, why did I do that for? But I've decided just to put it at this level here. If it breaks below 650, I think that will be a little bit negative. Share price has pulled back a fair bit from $9 down to $7. We have seen a little bit of buying today. So the question becomes, share price has dropped a fair bit in the past 2 weeks. So are we going to see anyone coming in buying saying, oh, there's some good value here? Or are shareholders going to become a little bit nervous? And if they become a little bit nervous and they start to sell, that could put added pressure on the share price. And that's why it's very important to know a company, whether it's a high quality company, low quality company. Why are you in this company in the first place? Are you just trading it? Or are you in this company for the long term? So if you're in the company for the long term, you think this company has a lot of potential, in a bit of a dip like this could be a buying opportunity. So how many of investors are out there like that who are thinking this is a buying opportunity or maybe adding to their position, that sort of thing? So I do have a sell position. So the simple way to know, in my opinion, when there is a change in trend, it always comes in, it always depends on the situation. Like there was a little bit of a dip in Clarity back in start of August, but the trend didn't change at all. It was still an uptrend. And if you look at these green field areas, that's my long-term trend. It's my sentiment. So there's been no change in long-term trend in the share price just yet. But if the share price does fall below 650, that would be a negative sign because the share price rallied to 650 and then we saw that pretty big drop. And then we saw a rally above 650. In fact, it rallied above 650 on strength on the 22nd of August. And the share price kept on rallying. So there is a bit of a support level at 650. So if it does drop below 650, that would indicate that there is still continuing selling pressure on this company. I would need to see share price hold above that, and I'd love to see a little bit of buying coming in. Now, there's another thing. You could be really proactive, and this first big down day on the 4th of October could have been a sell signal, down 12%, because that's a really negative one-day countersig. So you could have been really proactive and went, I'm going to sell. But we saw the same thing on the 5th of August. That was another negative day, a negative looking candlestick, and then the share price rallied after that. And it looked like it might have done that, but we have seen continuous selling pressure over the last few days. So this chart is starting to look way more negative than it has in the past. In fact, I'd say it's looking the most negative it has since it started in this uptrend. But I'm not selling just yet. So 650 is my sell point for clarity. And by the way, it's very hard to differentiate between a short-term drop and change in the trend. That's one of the reasons why I do put some rules in. I put in sell points because I want to protect my capital, because I do use resistance and support. And if I do see support broken, that can be a negative. Not always. Sometimes it can be a false break, but it's not always a negative, but it can be a negative. And the whole point I do this is to protect my capital, let my winners run, and maybe this is it. Maybe Clarity Pharmaceuticals has reached its high at $9, and this could be the end of the uptrend. We just don't know just yet, but signs are not looking positive for Clarity just yet, but I need some confirmation. DeHarker says Appen just won't stop. What the F? The market cap of this thing is beyond belief. No profit taking after having gone up 100 times bag just on that July quarterly update. First half August report didn't show anything new other than a fall in July revenue. WTF. I'm in the same boat. I am staying well clear of Appen. I just think this is a plaything for day traders. And there's just too much. I think the day traders who have no idea about this company and just trading it. Now, we are seeing volume drop away. So I'd say day traders are taking their profits, gradually taking their profits. And we do see a bit of resistance at about 220. And this is showing signs of possibly rolling over. Just possibly at this stage, but it is showing signs of that, particularly with the lowering volume. So if we do see the volume continuing to low, day traders getting out, they won't support the share price, and the share price will start to drop because the valuation of this company is just insane for this company. There's so much questions about Appen, many fundamental questions about this company, and what's been holding Appen up is not the fundamentals. They're not improving. It's just day traders at this point in time. Anyway, I'm the same as you. No idea, but I'm saying well clear of Appen. There's too much uncertainty. It could keep going up, but I could see it dropping 50% in a fairly short period of time. James Dean died in 1955. Macmillan Shakespeare hitting 5-year trend line. Okay, let's have a look at Macmillan Shakespeare. So MMS. I have a feeling they all look pretty negative. The companies in this space: Novated Leases, Macmillan Shakespeare, SG Fleet, or SG Fleet, Fleet Partners, and Smart Group. Might be one other one in there. And they all look pretty negative. And if you just look at the daily chart for Macmillan Shakespeare, maybe look at the weekly chart. There is definitely, funny enough, $15 is a important level for this company. The reason I say $15, if you go back to 2021, share price struggled in 2022. Share price struggled to get above $15. So then up, you can see it's struggling. And whenever share price got to $15, it pulled back. So that was an important level. Share price broke above $15 in April 2023, came back to $15 in October 2023, then went all the way to $22 and has bounced off it again. Some people say technical analysis doesn't work, or maybe they say resistance and support don't work. Here's proof. Macmillan Shakespeare, $15 has been a very important level for this company over the past 3 years. First acted as resistance, now is support. And it's bounced off that support level quite nicely in the last few weeks. Would I trade this? Probably not. That's just me. I'm going to say no. Trendline, but you mentioned Trendline, 5-year Trendline. So let's have a look at the monthly chart. Okay. So what you actually, now go back to weekly chart. What you could do here is you could just draw like that. Yeah, I'm not sure where that 5-year trend line. Where's 5 years? 2019. Yeah, it's all over the place. I like the $15 acting as support. I like that really nicely. Okay. I am going to end. Sorry, all these other comments I have not gotten to, but I'm going to end this video right here. Anyway, so I missed quite a few comments. I am getting a lot of comments now, a lot of questions and comments. So it seems like I won't be able to get all through them, but wait for that standalone video on Clarity, Telix, and Neuron. I'll go through why I bought Neuron and Telix and Clarity. I was thinking of doing a standalone video for all three, but I thought I'd just bump them together or put them all together. Anyway, that's all I have for this particular video. If you have any questions, any thoughts, leave those in the comment section of this particular video. Otherwise, I am not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.